Yeah, so hello guys. This has been a very long time. So I was supposed to continue um the free course on YouTube over a month ago, but um I was trying to work out something regarding how I trade. So just recently, just last week, I transitioned from being a scalper to now being like a short-term slash swing trader. The reason I made this transition was majorly because of the fact that when it comes to scalping, my stop loss tends to range between 1 to 2 pip, and this increases the lot size and thereby also increasing the commission. So even if I'm in profit, sometimes the commissions is just so ridiculous because of how little the stop loss can be and how wide the lot size can be, which increases the commission automatically. So the commissions was just eating into whatever profit I was actually making and stuff. And then I tried to actually use a broker or yeah, on accounts that was commission free but widespread. So when it comes to widespread and scalping, they don't work hand in hand because when you're using the stop loss between 1 to 2 pip, when your spread is ranging between 3 pips and above, it becomes ridiculous to scalp that way because it becomes like it's impossible to scalp with smaller stop losses. So all of that made a transition to swing trading. And also, for the time being, majorly this year, majorly start from May, I will not really have the chance to basically be trading day in, day out, and also looking at my charts morning to night. So because I'm going to be doing other things that will keep me busy during those trading periods. So um the best form was to just or the best solution was to just transition into being a swing or short-term trader. So when it comes like the last place we stopped at market structure. Yeah. So the market structure, it was not fully completed. It was just the basics. I just touched on the market structure. So today I'm going to move into market structure deeper, and hopefully I'm able to cover up everything about market structure in this lesson. So let's head over to my charts. So I said today is not a trading day for me, so I'm not trading today because of bank holiday and all those stuff. So I was supposed to trade today, but not anymore. So let me just go to an empty chart. Yep. So the previous market structure I talked about is higher highs and higher lows. So we have like market structure can further be divided into major market structure. And this for those who are kind of familiar with market structure, this should not be new to you. We have the major market structure and the minor market structure. So this should not be new to any of you if you've actually come across market structure before. So this should not be new. So when it comes to major market structure, for me, major market structure are the structures that we'll see from a time frame. Major market structure is being derived from a higher time frame. There's a time frame like the higher time frame. Just put this HGF and the minor structures, major forms comes from the lower time frame. So for example, let's say this is a monthly chart and the monthly chart is bullish. And of course, as you can see, what confirms a bullish structure is when we start forming higher highs and higher lows. So let's say this is a monthly break of structure. So this, in this case here, this will serve as, for this time frame, we'll call this our major structure. Let me just major. And then when we not drop down to, let's say, weekly, daily, and the likes. So in this example, let's use the weekly time frame. So let's say the weekly time frame start forming a continuation higher, and then the pull back down. So let's say all of this is from the weekly time frame. So we can for a fact say that this is our minor structures. The reason why this was called the major is because this is what we're paying attention to. This major structure is the one that's currently in control. That's the higher time frame structure. While this minor structure, where you see price moving high and then break structure to the downside. Most people who just focus on just one time frame, they might think this price is now bearish. But forgetting for the fact that higher time frame, which is the monthly chart, which is the major structure to this weekly time frame, um, is still bullish. So the thing this is bearish on the weekly, yes, it's bearish on the weekly, but overall, there's the higher time frame structure is still bullish. And that's why you see cases like this. People expect price to take out. I used to take out the slow. Well, what happens is we get a continuation higher. So for me, what I do is this. I use the major structure for my bias. I use this to get bias, the general bias. And I use this to get a bias. And I use the minor structure majorly for entries. I use to get my entry. It's just as simple as that. There's nothing complicated about it. So that's it for major minor structure. So if I flip this to the upside, this should be for the likewise for the cells. So we're in a cell bearish bias, same thing occurs. So that's it for major and minor market structure. So moving further, now I'm going to give you a framework on how you can be able to read and understand market structure better. So let's say, for example, we move this to the side. So let's say, for example, let's use the same framework, which is let's just go back there. Let's stay. So let's say, for example, we have a monthly break of structure to the upside. So I'm trying to give you my framework on how I tend to read the bias or read the charts in terms of market structure because it's not about, yes, everything I do is about market structure, but there's a way or there's a technique that I use to actually read market structure that's to avoid confusion because if you don't have a certain pattern or a technique, you might just be all over the place and it might get confusing for you. So today I'm not going to really move into any charts or any chart. I'm just going to be giving you a framework all throughout today based on market structure. So for the monthly time frame, let's say this is the monthly time frame vehicle structure. So what happens most times is we're going to see the minor structure start giving the continuations to the upside. Now, this continuation, because we've hit monthly major targets, we'll be expecting is a pullback. So sometimes this continuation higher doesn't really hold for long before we start seeing a pullback. But in this case, let's amplify the continuation. So we're going to see something like a continuation moving higher. So if I'm focusing on the monthly time frame, I will not try to chase these minor structures. All of these moves going higher, I won't chase it, except I would like to play the weekly time frame also. So that's when I would try to actually catch all of this by moving higher. But if I'm not doing any of that, if I'm just focusing on just the monthly time frame alone, I won't chase this price moving higher. I'll just stay out and wait for price to pull back. Now, this is where a lot of people get caught up. Yeah. So immediately price, like I said, price will start giving continuation on the minor structures after the break of the major structure high. Minor structures start giving continuation moving higher. So then all of a sudden, at the point in time, price then drops suddenly, gives an heavy drop. Now, what some people do, or what most people do, this is where they get market structure wrong, is that when price breaks this low is not a signal for you to start looking for shorts going long like this. Yes, in some cases, yeah. But if this pullback into the monthly time frame structure, because the monthly time frame is still bullish, so let's say this is all what we see, what will happen on the monthly time frame is this. All of this will just be one leg in price, and then all of a sudden we have a complete pullback. So if a complete pullback causes this low to be taken out, now you should not use this break of structure as a way to go short. Don't do that. So that's one of the major mistakes people make when it comes to structure. But if like I said, in some cases, not all cases, not all cases. Sorry about it. So in some cases, like while in some other cases whereby this is not yet a complete pullback on the monthly time frame. Let's say the after the break of this low, this break was not yet a complete pullback on the monthly time frame. We've not really confirmed that that's a complete pullback. Yes, you can use this. You can use this buy up to then sell down as a way to go short. But if that's a complete pullback, do not use this, yeah, as a way to go short. So in what this is for me is that this serves as inducement. So this will be on the next lesson where we talk about liquidity. For now, I'm just trying to incorporate it because that's the way you get to understand it better. So when we're talking about liquidity and inducement, we'll talk about it better. But for now, we're just talking about market structure. And what do I mean by inducement? What's inducement? So I'm just going to pull up the dictionary meaning for you all to see. So yeah, if you take a look at it, inducement definition. So inducement simply means a thing that persuades or leads someone to do something. So they give an example here. Companies were prepared to build only in return for massive inducements. There's no inducement to wait for payments. Like another definition is simply a bribe. When it comes to what's a financial inducement is clearly intended to produce assets from employment in order to restructure the workforce. Additionally, but while in all of this, okay, here's another one, an act or a thing that is intended to make something happen or persuade someone to do something. So for me, the simple way I define this inducement of a thing is this. An inducement, when it comes to the chart work or the forex market, let's just call it a chart work. It's something like it's a move, it's a price move that gives traders the first perception of price that leads them into the first direction of price and then immediately reverses to the opposite direction. So what do I mean by this whole long definition that I've been going on waffling about? What I simply mean here is this. So as you can see, this low that was taken out, this gives the traders the first perception or the first narrative that price is switched to being bearish, and then all of a sudden they see a shift or an index reversal in price, failing to actually maintain this first narrative or this first bias that price has switched to being bearish. And then all of a sudden we see price start going higher. Inducement is not just because some people they think inducement is just when price goes a high and then start pulling back. No, it's not about just that. You have to understand the narrative first. And one of the simplest ways to understand this is if you just focus on higher time frame or the major structure, you're able to know that this load that was taken out is not the way, is not it, it's not a signal for you to go short. This load that was taken out was used as an inducement to then continue moving higher. So when it comes to inducement lessons, I will explain that better. So let's round this up. Let's round this whole market structure of a thing up. Because we're still going to be talking about market structure because everything I do, anything I use when it comes to the markets is based on market structure. But I'm just trying to give you the foundation for now. So yeah. So let's round this all up, this whole market structure of a thing up together. So in this case, I'm going to analyze, I'm going to do a top to down analysis because when I'm swing trading, I do a top to down analysis from the monthly chart and from the 12-month chart, which is approximately the 1 year chart, down to where to the daily chart. So you can see, I think I gave this bias since the start of 2023. Yes, of course, if you go back to the group, if you look for this, I give this, I think on the 1st of January, I think that 1st of December to 1st of January 2024. That's when I gave this whole analysis. And I said, like, but we'll get to that shortly. So let me pull up the different charts because I don't want to touch this. So let's start from the 12-month charts. So for the 12-month charts, this is the way I analyze my charts. So from the top to down, what's the recent structure on the 12-month charts? So we have a buy, leaving here a swing low, and there's a swing high. And the bearish markets, what happens in the bearish markets? Swing highs are protected while the swing lows are targeted. And as you can see here, what was targeted? Is it the swing high or the swing low? Definitely it was the swing low. So what does this make this market? So this market automatically becomes a bearish structure market or a bearish market structure. And then this swing high was the high that was protected. So we identify this as the monthly 12-month high. Then what happens? So we can see the price is already pulling back up on the same 12-month chart. Where they pull back up, which makes this a swing low. So there's a swing low. So for price to continue to maintain its bearish form or its bearish current bearish state, we expect the swing low to be targeted while the swing high remains protected. If our eventual price takes out this high, this will give a complete shift in market structure, a complete change in market structure to being bullish. But for now, price is still bearish, and in the bearish market structure, we're expecting a pullback because we've had a completed pullback now. So we're expecting price to do what? Head for this low here. So after this, and then I move down to the 6 months charts. So on the 6 month charts, in that pullback, do we have any minor market structure on the 6 months? Because this pullback, what pullback does is, like this pullback that you're seeing here on 12-month charts, on the lower time frame, that's when we start seeing minor structures, bullish minor structures, just like what I explained a few minutes ago. The major structure is the 12-month chart, which is bearish, which is this, and the minor structure is this pullback. Yeah, so we're looking for this minor structure, which is going to form the bullish minor structure. That's the higher high, higher low, higher high, higher low, so on and so forth. So we'll pull them now to the 6-month chart. Do we have any minor structure? Nope. Then we'll go over to the 3-month chart. Do you have any minor structure? Nope. There's no minor structure. Then head over to the monthly charts. Do we have any minor structure? Moving to the upside, yes, of course. What do we see? We see we have pull up, a pull down. This pullback forms the swing high. Do we have a swing low? In the bullish market structure, swing lows will be protected, while swing highs will be targeted. So we can see this start forming the minor structure, the bullish minor structure, pertaining to the 12 months bearish major structure. So yeah, we had a pull down again and a continuation higher. Then all of a sudden, price failed to hold on to this bullish structure, and then we had a complete shift in market structure. So I'm just going to do this. Coming. Oh, yep. Oh, trying to hide this. Okay, yep. So, yeah. So as you can see here, what do we see? Perfect structure. Higher high, higher low, higher high, higher low, and a higher high. Then we had a shift in market structure. So this is the O. So monthly time frame now is the time frame that has the minor structure to the 12-month charts. This is the major reason why I said we're going to talk about time frame usage. Not yet. So monthly time frame utilization. So I'll talk about how I tend to use and select my time frame. I don't just select time frame randomly, or neither do I have a static way of selecting time frame. My time frame is based on what the market is giving to me. I can just go over to okay, my major structure is the 12 month, and my minor structure is going to be on the 3 month or 6 month. No, depends on what the market is currently giving to me. So we're going to talk about that in multi-time frame utilization. So hopefully we're able to get it fast enough. So here I said we've had the monthly charts switched to being bullish. So we're going to consider this a break of a monthly low, and then this becomes monthly high. So if we're going to continue, if price is going to continue being bearish on the monthly chart, which is the minor structure to the 12-month chart, we expect the high to be protected, while the low, which is this pullback, to be targeted. So this is how easy you can get your bias. It's not hard. There's nothing difficult about it, just nothing ambiguous or anything difficult about it. Just the same thing we did here, whereby you can see, well, in this case, the reverse is the case, whereby the monthly was basically bullish. Then we had a pullback. So I'm going to use this one to explain to you what I mean by inducements. So I'm coming. Um, the monthly we had a pullback. So I said in the bullish markets, the swing low, which is the monthly low in this case, is meant to be protected, and the swing high is meant to be targeted. So we have a pullback. So this pullback here um is going to give some people false narrative thinking price is going to go bearish. But of course not, it's not yet ready to go bearish because the monthly in this case is still bullish. So but not to waste your time with all of this, just want to do this as fast as I can. So in this case here now, so all of this pullback that we've had right now, we're going to see the exact same thing because the monthly is bearish. So we're looking for the same minor structure. Now, which time frame has the minor structure to this monthly, which is going to give us the higher highs on the higher lows and so on and so forth. So we're going to drop down to the weekly. So did the weekly give us that minor structure? Yes, of course. As you can see here, what do we see? We had price start forming higher high, higher low, higher high, higher low, then higher high, then higher low. So you can see how every higher low is being protected and every higher high is targeted. Then we have here price pulls back down into here, and then what happens? We have the continuation higher. And then all of a sudden, price now has now followed the major structure, which in this case now, this monthly time frame, this bearish monthly time frame is now the major structure to the weekly time frame. So then we had a drop down. So we can say for a fact now that there's an alignment between the major structure and the minor structure, which are both currently bearish. So we had price take out the swing low, and in the bearish market, the swing lows are targeted while the swing highs are being protected. So here what happens? We have weekly break of structure or, or weekly shift in market structure, and this becomes the weekly high. Since we're bearish on the weekly now, we're expecting price to rally over to the weekly low. So all of this pullback, same thing we did here, that's the same thing we're going to see on the daily chart. For me, I use the 2 days, 3 days. But for this lecture, we're just going to stay on track and use the daily only. So in here, what do we see? The minor structure to the weekly time frame is now the daily because we can see minor structure here. But we have all of this pulled up, swing high, swing low. This becomes high, low. Then we form the higher high. Price failed to hold on to this bullish structure, and we had a shift in market structure to the downside, so which makes the daily chart now bearish. But I said, for me, I use the 2 days, 3 days. For this lecture, I'm just going to use this one only. So this becomes, the daily becomes bearish, okay, right now. So that's it when it comes to major structure and minor structures. So that rounds us up for structure when it comes everything related to structure for me. But I said, when we start dealing with other stuff like the liquidity and adjustments, AOI, POI, multi-time frame utilization, and I'm reading prices in the framework. I think I just gave this one now, this lecture here, but it's going to be more complete in here. And then like when we start adding all of this together, entry technique, this is what really forms a good strategy for you. So currently right now on this Euro Swiss that I'm eyeing for this week, I did exactly the same thing. I'm just going to run up this quick on the 12-month chart, which is the 1-year chart. What do we see? We had a very major structure. Then when we drop down to the 6 months, we don't have anything here. There's no structure on the 6 months. And then the 3 months, what we can see is the 3 months is forming the minor structure to the yearly charts or the 12-month charts, whereby we're forming a continuation setup, a continuation minor structure where we had a low, a high, forming a lower high and then a lower low where we're having a pullback, then the drop, this pullback that we're having right here, which was completed in the first quarter of this year. Is going like let's see which of the time frame is forming that minor structure because that's a bullish pullback. So we're looking for a bullish minor structure. Do we have anything here? Nope. On the market, nope. On the weekly, do we have anything on the weekly? Yes, we have. So this break of structure now is not for price. Do not see this because this weekly break now, some might take this as a means to want to buy up. Nope, that's not it. This serves as an inducement for me right here. The reason that was not labeled like that is because this pullback was not yet complete as at last week. So that's why I just consider it as a weekly break. But this is now a complete pullback. How do I identify a complete pullback? A complete pullback, you can see the candle. I want this candle forming the pullback to close, and then a new candle opens. That's what forms a complete pullback for me. because in some cases you might see the pullback, you might think there's a pullback, and before the candle closes, this candle might just drop down and turns to bearish. So we want to wait for the candle to close first. So yeah, we've had this is now the inducement for people to think this is now bullish for price to drop and continue higher. Nope, that's not what I'm seeing. I'm seeing it in a different light. Then when I drop over to the daily now is forming the minor structure. So we have like this is a 3 days chart. I'm not going to move over to that. And this is a 2 days structure. So yeah. So 2 days was bullish. Then we've had all of this pullback. This completed the pullback and moved over to this candle. So we had a complete pullback. And then for the entry, if this was literally a trading day, this should have been a classic entry, but nothing, not entering today. Like I'm just staying the sideline. So that's I think that concludes it for the whole market structure, the foundation for the whole market structure. And the next one we're going to be moving into the next lecture is going to be liquidity and inducement. Like I said, hopefully we're able to get all of this, do all of this as fast as we can. So the next one on the list is inducement and liquidity and inducement. So I hope you find this helpful to your trading strategy. And until then, see you next time. Bye bye.